Patrick, I'm pumped for today's show because we're talking about hard-hitting topics like the Fed turning off the non-permanent residence immigration tap. I'm curious how this is going to affect us. And not only are we talking about that, we're talking about inflation, deflation, stagflation, dragflation. I've never even heard of dragflation. So Patrick, this is going to be a great show. What else are we talking about?
Well, we're going to talk about, are we going into a recession? Is it going to be a hard landing or a soft landing? We definitely need to talk about that. And will the feds actually follow through on shutting down non-permanent resident immigration into this country? What's the effect of that going to be if they pull it off?
Double rate cut. The Bank of Canada just did a double rate cut. What's that going to do to the real estate market? We're going to dive into that. And we're also going to dive into the productivity emergency that is only getting worse. And we're going to look at the different facets of that. So get ready, strap in. It's going to be a great show. Let's go, Patrick.
Let's do it. Just a reminder, make sure that you're liking, you're subscribing, you're commenting. Let's get those algorithms fired up. Let's get this show pushed out to more. And by the way, those algorithms will push more shows like this to you so you stay updated.
All right, Patrick, topic number one, the Bank of Canada and their double rate cut. JG was right. I called for a double rate cut. And Patrick, very much, my double rate cut prediction is very much like your gas is going up prediction, which is I've said it long enough that eventually it comes true. And, so I'm right now. I'm actually right. They did a double rate cut, which I'm very excited about. And it's so fresh. It's like it's barely a week old. So it's very, very fresh. We're not going to see the impacts of it quite yet. What are your thoughts on this? And I already kind of know where you're going to go with this, but hit me with your thoughts on this double rate cut.
You think you know where I'm going to go, but really you don't. No, I have no idea. At the end of the day, I don't think that the 50 basis point rate cut is going to make a huge difference, to be honest with you. We saw listings go up because now sellers are going, okay, now that rates are down, things will start to sell. Buyers still haven't come out of the woodwork. And this 50 basis point cut, JG, has a way different meaning behind it. So if you're in real estate, you're thinking to yourself,
oh, this is so good.
But in reality, the Bank of Canada is really frightened about a couple of things. Number one is the economy is slowing down. The data across the board is starting to show up. There is lots of fear given that, things are slowing down. Is this recession going to be hard? They've been trying to manage it to make it a soft landing, as they say, but depending on where you're at. So all to say this, in the real estate world, we're kind of happy. We want to see those rates come down, and they're going to come down. They barely even got the 50 basis points cut out of their mouth, JG. And what was the conversation that was literally happening the next day? What are they going to do in December? So already people are forward thinking. They're going into it. They're already counting on another 50 basis points in December. Here's the thing about it. It means that the economy is slowing down. As investors, we have to be very aware of that. This isn't about real estate. This is about a slowing economy, and not just at a national level, like as in Canada, but at a global level, certainly including the US in all of that conversation. So we got some headwinds ahead of us, which spells opportunities for real estate investors, and lower variable rates is good news.
That part's definitely good news for real estate holders that have variable rate mortgages. You and I included, Patrick, we both have a lot of them. So this is a welcome relief for both of us and those mortgage holders. But I will say this, number one, it's already having a big effect, I think, on the real estate market. And I'll tell you one place where I'm seeing it already. I did a video on this like probably a little less than a week ago, but we are starting, and this has been happening now for the last 6 weeks, since the previous rate cut really is where this started happening. And now, to me, it's only going to accelerate, is rents. This is going to drive rents lower. And the reason for that is because two things are happening. Number one is the immigration. We'll talk about that next. But the fact that the rates are coming down, people are starting to think,
maybe I'm going to buy a house in the spring.
And I'm seeing a lot. I know the market I play in, which is the premium rental market, which definitely my renters can buy a house. They can go buy a house, and they're choosing to wait. They're choosing to pause. They're choosing not to move to a nicer rental unit because they're thinking,
I might be buying.
And this is putting downward pressure on rents. And I've been seeing this across our portfolio. We got 200 plus doors we manage. We're seeing this across the way, and I think it has a lot to do with this. This is not something everyone's talking about, but I think this is the kind of ripple effect that these rates will have. And I think this is the first one I'm feeling. I think we're going to feel others as we go along, but I'm starting to see this firsthand, Patrick, in my portfolio and in the portfolio of our clients.
I think that's part of it. I don't necessarily agree, because I do agree, by the way. I think that's a small part of why rents are starting to come down. But really, from my perspective, rents are coming down also because we've hit that ceiling of limitation that people are willing to even or can afford to pay. And, that's why we're seeing doubling up and all the things that are happening in order to accommodate it, because consumer confidence continues to be very, very low. People are worried about losing their jobs. We've talked about this in the past, savings rates are going up. People have more money in the bank. And although that sounds good on the surface, the reason they're doing that is because they're really afraid of what's coming. So then it becomes a self-fulfilling prophecy in terms of what happens economically, because they're spending less money. So it's all to say this, is that rates coming down definitely has an impact. And arguably, some landlords will go, okay, my costs are coming down, not really that much, but because as much as a 50 basis points cut make a difference in terms of a little bit of cash flow, you've got rising interest or rising insurance costs, you've got rising maintenance costs. I mean, there's a lot of costs that continue to go up. So I think what we've hit is just a ceiling of limitation of what people can afford to pay. And it depends, again, what region you're in, how far those numbers are coming off. So let's just talk about the condo market, which is totally melting down in Toronto, and it's only just getting started. It's going to get far worse over the next year, 6, 7, 8 months, next 12 months. We're going to start to see that condo market. So that's going to skew the numbers, by the way. So you spoke to it, in your region where you're kind of got those 200 plus doors, it's a different world than what's happening in Toronto or what's happening in Alberta or British Columbia. So I know it's long-winded, but again, there's a lot of factors that are going into why rents are coming down. And those rents are really coming down in Vancouver and Toronto, especially in that condo market.
Yeah, well, that's for sure. Yeah, I mean, the condo market the condo market's a relatively small part of the overall market. Like, it's not like it's representing 60-70% of the market. There's no doubt about that. It's in those markets, it's a big part of the market. But this is a big country, man, with a lot of people, and there's no doubt that.
But JG, your Toronto market, dude, there's thousands of condos in that market that have now come online that aren't being rented. They're not being sold. And you're not even those that are being rented, those rents have come off because now there's all this supply out there. So again, those are big markets. Toronto and Vancouver always skew the numbers. This is only to say this. I'm not disagreeing with you, other than to say it goes back to what we often say. It's regional. You have to look at the regional market to understand.
And you just said it. You said it perfectly, which is it skews the numbers, which is you got investors reading in the headlines that rents are down. Rents are down 33%. No, they're not. They might be down in that particular place and that particular condo building where there was 3 apartment buildings and they were down 33%. But it's ridiculous. And hopefully people are smart enough to watch this show in order to get the truth of what's happening in the real estate market, not the headlines, because we don't talk about the headlines. But I have seen, and you've seen it, and I've talked about it, Patrick, rents definitely, you're right, have hit their ceiling of limitation. And there's other factors that is driving them to come off a little bit. But the main message I put out on my rental market update, I think it was last week or the week before, is these rents are coming off the highs, but everyone's got to chill out here. I mean, you had a 2-bedroom apartment that used to rent for $1,600, and then it was $1,700, and then it was $1,850, and then it was $1,950, and then it was $21, and then it was $22, and then it was $22.50.
And this all happened in the last freaking 2 or 3 years.
And it comes off $25 or $40, and people are losing their marbles that the rents are coming down. They're not coming down that much, and it's sure as hell not impacting. And you still are able to do great in real estate despite them coming off. So people just have this instant, like, this is the stock market kind of feeling about real estate. Like, I find real estate's becoming like that, where people look at the data so close and their nose is so close to the grindstone, they're completely missing the picture. And real estate works in decades, not in minutes.
Well, yeah, and that's a really good point. But the other side of that is that they're also looking at the data and misinterpreting it. Again, they're looking at a Canadian average rent, which we keep beating that drum going, no, what is it in the area that you're investing in? So for example, right now, Edmonton rents, depending on where you are in Edmonton, they're actually increasing, and they've been very, very strong. Demand has been very strong. And I'll use Edmonton as an example. That shifts, of course, and when you look across southern Ontario, all of the different kind of centers, the communities, they all vary depending on where you're at. So that's the main message there. We can beat that one to death, but ultimately rents aren't falling to the degree that the headlines would have you think they are. But okay, let's move on to the next topic in that same vein, which I want to talk a little bit about what that will mean for rent. What will happen with rents when non-permanent residents get cut back? Will the federal government actually cut back on the immigration numbers? They say they are, but I think that is vote getting. I think they're trying to say,
Hey, we've been listening to you.
okay, well, finally, it hasn't been 100 years since you guys, that's what it feels like. Anyways, the point is that if they cut back on non-permanent residents, we as investors have to pay attention to it. Now, they made the announcement, doesn't mean they're going to do it. I mean, the government has been known to maybe stretch the truth a little bit or not follow through on a promise. So having said that, if they do cut back on non-permanent residents the way they're talking about it, it will in fact affect the rental market. Demand will start to come down in certain property types for sure, and in certain regions. So we have to pay attention to that number.
I can tell you, Patrick, I'm already seeing this, and I've been seeing it since the midsummer. And I don't know how long the data shows that they've been slowing down the non-permanent residents. Maybe you have a chart in here you want to talk about that. But I've been seeing it since the midsummer, where the student cohort of rentals has really been struggling. In fact, I have a couple, as most people know, I don't do a lot of student rentals, but we have a couple clients that do student rentals. We manage their properties for them at Vista Property Group. And I got to say, they have some beautiful, perfectly located, really great student rentals. Those suckers are not renting. I am putting premium renters in there instead of students because they're just not renting. The demand is not there like it was a while back.
Well, students fall into that kind of general cohort of non-permanent residents, so it isn't specifically non-permanent resident as in temporary workers, but ultimately it's all part of, if you see the cutback in students and the effect that had, if you go into the non-permanent resident category, you can start to see where that will in fact have an impact on the rental market. Those are our renters, and we have to pay attention and say, where is that cutback going? And so here's the thing, it's going to get much more competitive. But here's the dilemma, JG. Let's just kind of riff off this a little bit. When we look at what drives our economy, this goes back to where we talked about, are we going into a recession? Is it going to be a hard landing? Is it going to be a soft landing? We go back to the non-productivity of Canada in general. We've talked about that several times. I can just lose my mind over it, because when we look at the manufacturing pulling back, when we look at consumerism, when we look at housing slowing down, our economy is driven by two fundamental things. And I know I'm generalizing and I'm being probably a little extreme, but I'll say that real estate has been a big driver, and it's slowed right down. Consumerism is a big driver, and it has slowed right down. We see retail sales going down. Ultimately, if we stop bringing immigration into this country, which has been driving our economy, again, when people move into a country by the hundreds of thousands, by the way, what are they doing? They're buying, they're spending money, they're setting up house, they're trying to get jobs. That is part of what has been driving our economy. On top of that, real estate. Well, we've had one of the major parts of our driver, real estate, slow right down. Then we've had now the conversation of non-permanent residents going to be cut back. Okay, well, we're not a productive country. This is the challenge that we face. We have a huge public sector who are working. Our government has actually been spending money into our economy, which gives people the false sense of,
we're doing great.
No, we're not. And we've been beating this drum for a long time. So when we look at what's going on global macro, we think about wars and oil prices, we'll talk about bond yields. There's a lot of things going on. Ultimately, we have to say, okay, will the government pull back on the immigration numbers the way they say they are? I don't know that they're going to, because they'll definitely put two and two together and realize, and I mean, let's face it, part of why they brought immigration in is many reasons, as they say, most of it bull. The reality of it is we needed it to drive an economy that is slowing down. So that's a long-winded rant, but that's ultimately what we're facing. When non-permanent residents get cut back, we are going to see an even bigger slowdown economically.
Now tell us about this chart, Patrick. I think you put, you either put this chart together through some StatsCan data, or you got it from StatsCan. I'm not sure, but I thought this is a really great chart because it kind of show you the population kind of components, the makeup, and it also gives you a bit of a prediction in terms of where it's going. And it looks to this like we're going back to where we used to be, which is 300,000 new people in the country every single year. Not what we've had in the last couple of years, which has been several hundred thousand more than the kind of our average or our mean, if you will.
Well, it's more like 1 million plus more. So the point of it is that when you look at this chart, you start to see that orange line, which is non-permanent resident, and you start to realize that, think about the impact that's had on us, not just economically, by the way, but how it's impacted our infrastructure, how it's impacted demand for rental housing, for example. So the reason I want to shine a light on this particular chart is a lot of the exuberance we have in the real estate, rising rents, rising prices, demand for investment real estate has been driven because of that immigration into the country. That's a big part of why our real estate has been doing it. So as investors, when we look and say, okay, what's going to happen if they pull back on non-permanent residents? That's like saying, okay, all these clients that you had, all these potential tenants are now going to be cut off. They're going to slow it right down, by their words. We saw the impact of that, for example, with student housing. We've got a model. Okay, well, what happens when they do that? Well, I'll tell you what happens. There's nobody to rent those units, and we see that in the student housing. Now, that's only to say that the savvy investor will make sure that they're got great units, that they are in demand, they're paying attention who their tenant client or the tenant profile is. I'm not worried about it, but there's going to be investors out there that aren't paying attention to it, aren't really producing great units, aren't really clear on who their end user is going to be from a rental point of view, and they will actually struggle, because if the federal government does follow through on this immigration policy, you can see what the forecast is for non-permanent residents, and it falls off the cliff. They're like shutting it right down. That represents like 1 million people, JG. And so that's a big concern.
Now, but what you're saying, just to be clear, Patrick, because this is important, because what you're saying is if you're a rental housing provider and you're a landlord and you own real estate and you're renting, you have to think about your audience, called your tenants, called your clients, and you need to adjust perhaps or pivot who you're renting to if you're going to stay in this business. Because people hear this as, I shouldn't get into real estate because of this. But that's not necessarily what you're saying. You're saying you just got to be aware of who you're renting to, and you may need to change up your strategy. The same way I've been saying for years now, be careful on Airbnb. Don't put all your eggs in the Airbnb basket. Don't put all your eggs in the student basket. You have to you have to consider these things when you're in real estate. Real estate's not just like perfect. It's a business. You have clients. You have to market. You have to do sales. You have to do marketing. And all of this is a part of the real estate business, isn't it?
It is. And, the thing is that you got to put a lot of stuff together in all of this. And ultimately what will eventually, I believe what will eventually happen, in my opinion, is the bank or the federal government will go back to stimulating the economy. We'll have quantitative easing at some level, some monetary policy that will shift, because the economy is definitely going to be slowing down. We are going to get very uncomfortable in 2025, in my opinion. When I look at the data, that's what it shows. Now, here's the thing about that, is that those individuals, so we look at what's going to happen economically, and we beat this drum, and I can't stress enough, we as savvy investors, sophisticated investors, trying to create a financial future, have to say, how do we do that? There's a lot of people that are sitting on the sidelines doing nothing, afraid of real estate. It's going to be a bubble. It's going to crash. It's not going to crash. Will it come off all-time highs? Yes, and it already has. I think Vancouver's back to 2019 kind of numbers. So if you bought at the high, yeah, you got beat up. You're down 300,000-400,000. It's a game. It now becomes a waiting game for those particular individuals. But I think we have to understand that when we look at what's happening economically, you need to own hard assets. Real estate is one of those hard assets. It is a risk-off kind of asset. So if you look at a 5, 7, 10, 15-year plan, you need to own those assets. If you don't, will be the diverge in economy and in, I guess, socioeconomic class. In other words, those who own hard assets, i.e. real estate, when you look 5, 7, 10 years down the road, given what's happening with the global economy, this is a global conversation, they will, in fact, enjoy the benefit of owning those assets. Those who are sitting on the sidelines waiting for real estate to crash, they're going to be sitting there and they're not going to buy in and they're going to lose it. We've talked about this before. The increase in real estate is already worked into the cards. Our Bank of Canada, our government tells us we have to have 2% inflation. As a matter of fact, JG, they're worried about deflation. And in some sectors, it's going to be deflationary. So if you've got a government saying you're guaranteed inflation 2% a year, that's going to impact all asset classes. It just is.
That means they're going to artificially inflate things at 2% per year forever. That's what their target is.
Does it get easier?
No. Yes, it gets easier.
The reality is, I don't care what government it is, whether it's our NDP Liberal government or the Conservatives, it doesn't matter. You're going to put a government in there, and the last thing they want to happen is for real estate prices to come down. They talk about it in affordable housing and blah, blah, blah. How affordable has housing how affordable has housing become since they've started that narrative how many years ago now? It doesn't get more affordable. As a matter of fact, it gets more expensive. And they're not building anymore because of the zoning and the bureaucracy, and builders and I mean, let's face it, developers are, they're going broke right now. There's a lot of that's going to work its way through the system. It's going to be a long time before we see real estate drop because it's not in the cards. It's just not.
Now, Patrick, you talked about prices, put up this chart on the screen about these prices. And this is a good example. You talked about Vancouver maybe being back to 2019 prices. I'd have to see a chart of that. I doubt that very much. You might be talking specifically the condo market in Vancouver. But there you go. That's real estate investors. They read the headlines. They get confused like, oh, real estate's back to 2019 levels. No, it's not. Read my lips. It is not. If you bought a condo at the tippy top, yeah, you got your ass handed to you. We told you not to buy condos at the tippy top. It was a dumb move. What do you want me to say? But the fact is that real estate has not gone back to 2019 prices. This is an average price chart, which we hate average prices. I don't even know, I'm not sure why we show it. But the fact here is, Patrick, is the average price was $460 in 2019. The average price is now $685, roughly in the middle of this summer. That's what it was. So the point is it's still way up from where it was in 2019 across the board. And I know in my particular case, I bought some property in 21. I bought property in every single year since I started in 2010. And I can tell you that all of my properties are still up considerably from where I bought them. But I don't own any condos in Toronto either. So I'll leave it at that.
Good for you. Hey, JG, you take our own advice. So the thing about you drink our own Kool-Aid, that's good. Good for you. You are brilliant. The thing about all of this is when we look at where real estate is going, and even if they cut back on non-permanent residents, and by the way, if they say they do, you're going to watch our population continue to grow quite well, because all they'll do is shift. And then all of a sudden, those non-permanent residents will all of a sudden have the opportunity to become permanent residents. So as much as they are going to cut back on non-permanent residents, there is going to be likely a shift in terms of, okay, well, you can become a permanent resident. They'll open up the doors to having visas where you're more permanent. So that's one aspect that will probably happen. These are just kind of my views of the world and when I see what's happening. But I think there's another that we got to talk about, JG, before we forget. This wasn't in the cards, but Trump. What's going to happen if Trump gets elected? Now, there's a lot of controversy about that. Like, I'm a fan of Trump. I've been watching him closely and I'm going, something, if you're going to put a president in there, Trump's the guy to go versus Kamala. That's just me. Okay. So that's my opinion. But here's the thing. Trudeau and Trump, they're in a different playing field, and Trump is going to eat Trudeau alive, and it's going to be very detrimental to what happens.
That's already happened once. We've already seen the effects of that. That's like a replay, Patrick.
Yes, but see, if they got along, Trump's a business guy. Trudeau's a drama teacher. We know that he's not competent. That whole federal government's not competent when it comes to business. They've proven that. My point is this, is that when Trump comes in, we're going to be in some serious trouble if he gets in and Trudeau and him can't get along. I just don't see that happening because Trudeau really believes that he's got some cards up his sleeve, like he's got some negotiating power. Trump's going to eat him for lunch and spit him out.
The best thing that could happen, Patrick, is Trump gets in and then Poilievre gets in. That would be the best case scenario.
A change in government is absolutely necessary. However, in British Columbia, no, we want to stay with NDP. Drive me crazy.
Now, Patrick, what's happening on the unemployment rate right now? We're ticking up, we're ticking down. Where are we at with the unemployment as of today?
Well, the unemployment is continuing to increase. And again, depending on where you're at, it's up in Calgary, but some of it's a little bit deceiving because ultimately what's happened is that you look at that unemployment rate in Calgary, for example, I think it's up around 8.5%. And in Calgary or in Alberta in general, what you've got is you got so many people coming into the province, there's just not enough jobs to go around. The economy remains quite strong, although people are slowing down 100%. You know, you're starting to hear the stories about restaurants that are struggling. In Vancouver, for example, many restaurants have shut their doors. It's just not working. The cost, people are just not eating out as much. Those things are starting to work their way through the system to no surprise. But when you look at what's happening in general, we start to see a slowing economy, and ultimately, this is what is showing up for us. I lost the plot. What were we talking about? Unemployment. So unemployment is a little bit deceiving because we've got so many people coming in, not enough jobs to go around. So it does make it look higher than it actually is. Alberta is a good example of that. Toronto, however, again, you start to see unemployment specifically in Toronto. Why is that? Because they're not building. That whole world was driven around construction projects, and those construction projects have pulled back or right off. They're not building anything new. Anything coming online has been in the works for 3 or 4 years already, 3 years for sure, and they're coming online. No new stuff. As a matter of fact, many developers are claiming bankruptcy or have become insolvent. So that's just working its way through the system. 2025 is not going to be good for Toronto.
Hey, Patrick, I want to shift gears for a second. Remember a couple episodes ago, when I say a couple, I probably mean like, I think it was April or May of last year, or like this year, 2024. I said to you, I'm going to be suing the city of Kawartha Lakes. Lindsay, remember?
Yeah.
We did, and we won.
Nice work.
We did. What's that?
Did you fight for costs?
Okay. So I'm going to spill the beans on exactly how this went down. I'll tell you, and it is disgusting. Disgusting, Patrick. It is freaking disgusting. But listen to this. So we had heard through the back channels that these bastards, and that's what they are, these bastards were just stringing us along, and they knew we were going to sue them. They knew we were going to take them to the OLT, the Ontario Land Tribunal. And we had heard through the back channel that they said that they're not going to defend themselves. When we push them to that point, they're going to cave, they're going to fold, they're not going to defend themselves. That's exactly what happened. They settled right away. Cost us, by the way, cost us an extra 6 months, cost us an extra $20,000 to do this. And in their settlement, they forced us to not go after costs, and they would agree for settle. So they would agree to settle, which would save us some money, but then we couldn't go after the cost of the whole thing on them. This is nothing but just a ploy, and it's absolute bullshit. And it is so disgusting that the municipality of the city of Kawartha Lakes, which happens to be the worst freaking municipality I work in, I'm so pissed off with them. But anyways, we did win. Now, here's the thing, Patrick. The federal government is giving that municipality extra money, extra transfer payments, because they are, in a housing development, and they're promising that they are doing all the housing that they promised they would do. And meanwhile, behind the scenes, the truth is, not what's in the newspapers, the truth is they're getting sued in order to get these development projects through the pipeline. That's the reality of how this is working. And this is the reason why the housing crisis will not get solved anytime soon.
Bureaucracy begets bureaucracy. That's the bottom line, JG. And, they have to justify, bureaucrats have to justify their job. And the way they do that is by putting people in front of them and by creating challenges. That's just it.
Let's talk about bureaucrats, because if you and I are not exactly fans of bureaucracies, but you're more vocal than I am. But we're both not fans. Now, let me ask you this though: what do you think about the stuff that Elon's been talking about? You know, he's going to be the government efficiency guy if Trump gets in. But this is getting a lot of these bureaucrats up in arms, man. This is really like starting to scare some people
It should.
of the efficient. Friggin' right, it should. And this is fascinating. I'm like, I hope Polyev does this in our country.
I think Polyev will go that way a little bit further, but I mean, you start to watch. Elon's a perfect example, but ultimately, entrepreneurs, what we can call capitalists, I like to use the term compassionate capitalists. It doesn't have to be, money driven. You can still support people. I mean, I've been in business 40 years. I consider myself an entrepreneur and a capitalist, and I've got people that have been with me for 25 years. The point is this, is that Elon's a perfect example of getting done when you cut out the bureaucracy and when you cut out all the middle and the excuses. He is think about it. He's running multi-billion dollars, billion-dollar companies. He's working with engineers. He's in the trenches. He's doing it because he's cutting out all of the stuff in between. Everything gets done faster because of that. What takes months or years at a corporate level, he does it in weeks, sometimes days. And there's lots of stories about that. The point is that entrepreneurs solve problems. They drive productivity. It's what keeps an economy going. My fear around any of what's going on economically right now is we continue to pump up the public sector, which is a non-productive component of anything. And if you're in business, JG, you know this. I mean, there's administrative costs that we have to bear, and whether that's accounting or people answering the phone or whatever it is, those are administrative things that are necessary to run a business. And gosh, you have to have accounting, because how else is the government going to collect our taxes, for Christ's sakes? We need to have our accountants do that for them. Anyways, we go off on a whole tangent there, but the point is this, is that we need problems solved, and we need entrepreneurs and small businesses to do that. We need to drive productivity, and productivity doesn't happen within an administrative environment called public sector. We need to get manufacturing going. We need to get research and development going. We need to get exports happening, and we're not doing it. And we're going to get left behind.
I know this is your rant. I get it. I feel the same as you, but I got bad news for you, bro. This is not going to happen, because the people that are voting these politicians in are voting for bailouts and handouts. That's what they want. They don't want to work harder, Patrick. They don't want to start a business. They don't want to have to work for a living. That's not what they're voting for. So good luck, buddy. I hope you're not I hope your happiness doesn't depend on this, because I don't see it happening in quite some time until we have some type of major crisis that is going to thwart us into a whole other component. I don't see this happening.
JG, how much more of a major crisis do you want? We got a global meltdown happening, and if anybody is paying even the least a bit of attention, although it doesn't show up on mainstream media, there's like at least 3 wars going on, at least that many. And so don't think that we're not going to be at the effect of the slowdown in China, the fight between Ukraine and Russia. Oh, and Israel's going to lob one into Iran, and Iran and Israel are going to go hard at it. Oh, well, let's consider what's going to happen with the Middle East. And by the way, BRICS just had a great meeting. It's now becoming more definitive, the East against the West. I mean, how much more of a crisis do you want to be? Just because we're not in it today, if you can't see the future, which all goes back to this, you need to own real estate. You need to own hard assets. You need to create a financial future based on what's happening today, or you are going to run out of time. How's that?
Yeah, well, absolutely. That is very, very good. Now, all of this. So I want to tie the end of this with the front of this, which is you talked about consumer confidence being at an all-time low. I heard a perspective the other day, which was fascinating. Do you know Ray Kurzweil? You know Ray Kurzweil, do you? Like, I know you don't know him personally, but you know who. Ray Kurzweil is the guy who predicted a lot of this AI, AGI. I mean, he's a futurist. He's and his predictions are 86% accurate. He's quite fascinating to listen to. But he said something interesting the other day, which I hadn't thought of before. He said that he doesn't expect the consumer confidence to ever go back up from where it is now. He doesn't really expect any meaningful increases in consumer confidence because of this divide you're talking about, Patrick. And this divide, by the way, is only going to get considerably worse, because as some of this technology hits the streets, and you already pointed out, the people who have hard assets are going to continually get richer going forward, and those who don't are not. And that's going to create even more of a divide than what we already have. And that's going to lower consumer confidence, not increase consumer confidence. And technology and the edge that technology is bringing to some people, it's only going to increase that divide. It's quite a fascinating perspective, but I hope people aren't waiting for the consumer confidence to return in order to get off their ass, because that ain't going to happen.
It's not going to happen, and you're right. And then ultimately we look at, why is real estate going to go up? We talk about built-in inflation. It's in the cards. They tell us that it's going to happen and what it is. But understand something. Are our assets really increasing? Is real estate prices going up, or is our money just being devalued? And the truth of it is that the fiat currency in general, on a global fiat currency level, but let's just talk about Canada. Ultimately, our dollars are getting valued less and less. Our buying power is less and less. And the 100,000 that you have in the bank today, or the 50,000, or the 10,000, or whatever the number is, the million, if it's sitting in the bank, you are losing buying power. In this economy, by the way, you are losing it quickly.
The money in your account, it didn't do too well, it's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
And if you think that inflation was a problem before, wait till you see what we're going to head into over the next 2, 3, 5 years, by the way. And yes, there will be some deflationary components, 100%. It has to, because of technology. But there are going to be things that just go up. And that's going to be because of supply constraints. It's going to be because of what's happening with oil. There's going to be a lot of reasons we're going to see inflation. And it's why we're seeing bond yields tick up. There's a lot of nuances in the bond yield, but we're seeing that bond yields are over 3% again, JG. I mean, it's very volatile. When you look at the fact that 50 basis points, and I want to go back to this interest rate, the 50 basis point, what people aren't saying, which is what it was an emergency cut. Bank of Canada is seeing where this economy is going, and they're going, holy crap, we need to react. 50 basis points. So I shared that
and
slide with you.
This has happened 4 times, right? This has only happened 4 times, I think, in the last 25 years or so.
Yeah. And guess if you look at this particular chart, every time it's happened, what's happened? Recession. So don't think for a minute that we're going to get away without some degree of recession. I'm trying to remain optimistic as I'm looking at the data, but it's just really hard to be optimistic. And particularly, JG, for those who own assets, it is going to be the great divide. The money transfer, the wealth transfer, the rich will get richer, or even the wealthy will get wealthier. Sadly, those in the challenging service sector, for example, construction, for example, is going to be another one that gets hit. You're going to see a certain demographic in that kind of middle and lower middle, and then below that, they're going to be challenged. We've talked about it before. If you're in that upper middle and beyond that, you're probably going to be bitchy because you're paying more, but it's not going to really affect your lifestyle too much.
Patrick, you're like Captain Bitchy. I mean, you represent that whole cohort right there. You're you're the captain of that crew.
I am the captain of bitchy. It pisses me off. I can't help it.
Hold on. Let me talk about this, Patrick, because you just said something fascinating here, which I want to touch on, because there's people listening to this thinking, well, I'm not in the house. I haven't bought real estate yet, or I don't have as much real estate as I'd like, or whatever story people are telling themselves. But do know that if you're watching this, and if you understand the narrative we're talking about, and if you want to have hard assets, Patrick, it's easier to get hard assets today than it's ever been before. Look at what you can do with REITs, real estate investment trusts. You can buy. You and I know personally.
Go to a private REIT. Private REIT.
Private REITs. You and I both know plenty of private REITs that do exceptionally well, and you don't need to have hundreds of thousands of dollars to join these REITs. So that's one option, right? Look at our friends, right? Steven and our friends there, where you can invest for $1 in hard assets. You can start with as little as $1, and there's plenty of other private REITs where you can get in for 1,000 or 5,000 or whatever the case may be. My point is, if you believe in this narrative Patrick is talking about, you can do this without having to buy an actual house or a secondary suite, or the way that I particularly do real estate. There are tons of options for people out there. They just have to be willing and wanting to go get it, Patrick.
100%. And so if you're really looking at this and going, well, I've got money in the bank, I don't want to spend it, got it. you need to allocate some capital to stores of value. So JG, when we look at what's happening economically, a 50 basis point cut is an emergency cut. If they do it again in December, it's really shining a light on what they think is happening economically. But we can't, and that's just within Canada. Now, we also have to consider that when we look at a global macro, gold is at record highs. Silver is about to launch into another stratosphere. So gold, I think, is up 70% or some ridiculous number. I mean, a couple of years ago, it was $1,700 an ounce US. Today, it's $2,700 or $2,800 an ounce US. That is where people go for safety because it rides, it holds a store of value that you can exchange that money for dollars in current value. So here's the thing, money in the bank is just losing value every single day. There's big concerns for even a hyperinflation kind of environment, which is just, it's about not just about the amount, but it's the speed. We'll start to see, we risk the speed of inflation gaining, and you need to get your money tied into these stores of value. And whether it's, and we're seeing gold, silver, we're seeing Bitcoin, depending on where you're looking at real estate. I mean, these are all hard assets and they're inflating because that's what's happening with the devaluation of the dollar. Again, we need to get our money to work.
That's 100% accurate, Patrick, in that last statement there, which is people have got to take their financial futures into their own hands. That's the overall message that I'd like to leave people with. And there's a million ways nowadays. There's more ways than ever before to do that, to take your financial future into your own hands. It wasn't this easy 20 years ago, 50 years ago, 100 years ago to take your financial future in your own hands. It is possible today, but people have got to do it. Because, Patrick, if they can do one little lap around the YouTube or one lap around Twitter, and they're going to hear an inflation narrative that is 100% legitimate. They're going to hear a deflation narrative, which is 100% legitimate. They're going to hear a stagflation, and now there's dragflation and all this other shit. Everyone's got their views, everyone's got their perspectives, and they're all legitimate. They can all prove it with data and so on and so forth. But the bottom line is that if people take control of their financial future, they won't be at the effect of this stuff because they'll be in control of this stuff.
Yeah, and you brought up a point that we'd made earlier around stagflation and dragflation. We play with words a little bit, but stagflation is ultimately when you're going to start to see unemployment rise and inflation continue to go up. And so you've got an economy that's slowing down and the inflation continues to rise. We use the term dragflation because the best case scenario is that it just everything slows down and stretches out. In other words, there is no growth. We've arguably been in a little bit of dragflation the past couple of years, and it can get quite a lot worse. And there is a strong argument for stagflation. And this is all to say that we really do have to risk mitigate and put our capital to work. We keep putting that kind of on the table. Get into stores of value, real estate being one of those stores of value. Diversify your portfolio, and you will prosper in the future. But you have to put your money to work. Real estate's a place to do that.
All right, Patrick, that was a fantastic show. We covered a ton of topics, and hopefully people really enjoyed it. We got kind of fired up on this episode, which I really liked, and I can't wait for the next one. But I do got to say this. At the next episode, Patrick, episode number 52, we will have a new president in the United States, and it will be a big deal. And I'm curious to see what we're going to talk about then.
Perfect. And oh, by the way, we are doing an event in Langley, British Columbia, multifamily 3-day event. You want to learn how to buy multifamily, develop land, even head south to the U.S., I'm teeing up with Wealth Genius, and we've got a great event lined up. So if you're interested in that, reach out. There's a link in the description below, and you can get registered for that. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.